So good afternoon, everyone. This is my first time in Bucharest, and I will be presenting Kaspa Network. So the very first question is, how many people here have heard of Kaspa before, maybe? Oh, that's quite good, actually, but also many people haven't heard of it before. I think that means we are at the right place. And by the way, we just had this exchange roundtable, and Kaspa is listed on Bybit, BitGet, and a lot of other exchanges. We're also listed on Binance with Perps, as well as Coinbase. So Kaspa is actually quite, just everywhere, as you can see in this venue, on the cups, on the napkins, and so on. So yes, today I want to talk about more is better. And I think this is quite an intuitive statement, right? Basically, that if we have more tokens, we feel we are having more wealth. And if we are having more price pumps, we may think that we are actually just getting more money. And also just for this event, if we're having more people visit here, we think this is a good event. So the most recent update on Kaspa is that we will have a 10 BPS. By 10 BPS, we mean you're going to have 10 blocks per second. It means the network can generate 10 blocks per second, and you have more blocks. And the major argument I want to make in this presentation is that when you choose to, like a public chain to invest in, to be a node or to be a miner or in whichever form, you should always think about the number of blocks you may be able to get, and you should always choose the chain that gives you the largest possible number of blocks. So that is the thesis for this presentation today. So what does 10 BPS actually mean, or what do more blocks bring, right? Because a very common interpretation would be, well, this means higher block rates, right? It means you can generate blocks more quickly. I won't say this is a wrong, or this is a misinterpretation, but I think it means more than that. It is, of course, true that Kaspa will generate blocks per 0.1 second, which is 100 milliseconds. That is good. It is significantly faster than Bitcoin and Ethereum. And of course, it's also faster than Sui and Solana block-wise. I understand this is a different concept than TPS. I will get to those very shortly. But I also want to use this as an opportunity to explain to you that Kaspa has always been active in the crypto field, even if it's not as known as Ethereum and Bitcoin. Kaspa is the first ghost stack, which means it's a directed graph rather than a longest chain rule. And this work done by Dr. Jonathan Samplinsky and his team is employed by popular chains like Sui, which is also a DAC chain. But this work was firstly devised and invented by the Kaspa research team. And it is also true that Vitalik, of course from Ethereum, spoke in multiple occasions about the Ghost protocol. That is a protocol that Vitalik thought of using to design the new smart contract system on Ethereum before they decided to turn to POS, a proof of stake system. So you can actually search for Vitalik and Ghost, and you will see Vitalik quoting these results from Dr. Samplinsky and their teams. So the major point here is that maybe different from many's knowledge, but Kaspa has actually always been the academic basis and cornerstones of many popular chains technology people are using on a daily basis of today. The next thing I want to talk about here is that I don't really want just to talk about block rates, right? Because if talking about block rates only means we are only talking about speed and being fast. And being fast is not my major focus of this speech. Because you can get infinitely fast if you are on a single server in a single data center. That's what happens with Hyperliquid, that's what happens with a lot of other chains. But I want to talk about what does it mean just because you have a larger number of blocks generated apart from the speed. So the point here is, I'm not saying that Kaspa is literally the best crypto chain in all senses. But I'm saying that Kaspa has at least comparative advantage over most of the popular chains you have been seeing elsewhere. For instance, comparing to Bitcoin, Kaspa is more scalable. I think this is quite straightforward because you have only 7 blocks per hour on Bitcoin network. And Kaspa, now you have 10 blocks per second. And also comparing to the rest of the chains here, I will again elaborate in a second, that Kaspa is in general more decentralized. It means that these blocks can include more transactions. These blocks can also invite or be more inviting to more miners and more nodes to build a decentralized network. This is specifically true when comparing to the specific mechanism employed by other chains. For instance, most of these chains like Tron or Solana, they're employing a leader-based consensus mechanism. That is to say, they have a super node or leader node that is elected or selected on the chain or the network. And in this regard, Kaspa is definitely more decentralized because they have just so many nodes and there are no super nodes, no election on Kaspa. So I guess then the next question here is that why decentralization actually matters, right? Because more and more users today just focus on the UI and UX. They don't care about what kind of infrastructures they're using anymore. To our understanding, we think that decentralization is the same thing as security. And these have multiple layers of meanings that I'll explain here. Because I do understand when people care about programmability, when care about the speed, cares about scalabilities, we have to emphasize these things must happen with the premise of decentralization and security. Or otherwise, this is no different from you using a Web2 product. And that is a spirit most people lose already. And here's an explanation of how other chains work. Again, this is pure comments on objective facts, and there is no criticism or what. But it's just a matter of fact. For instance, if you look on Tron, that it has 27 super nodes. I'm not sure if everyone knows about it, but every transactions you have on TRC20 USDT, for instance, is controlled by these 27 super nodes. For Sui, they have about 107, and now I think it's 105 validator node, and all of our transactions are controlled by those nodes. And to qualify to be a Sui node, you have to stake 30 million Sui to be qualified to apply to be a validator node. And note that is not 30 million US dollars. That's 30 million Sui of today's price is almost 100 million US dollars. So that is a problem we see here, that a lot of these chains are not decentralized. Of course, people may have the argument saying, well, the super nodes on Tron are making a lot of money, why they would do anything bad? But our argument analysis here, this is just like a nuclear power station, right? That oftentimes it's just fine, but once it has some problems or is someone that is malicious, wants to do something evil, it's going to be disastrous. And we don't think the probability of over half of 27, which is 14 people want to do something bad, is that low. I want to spend a few time on Solana as well, because Solana's and Ethereum stuff is more complicated. So for Solana, you have to elect on one leader node for every round of the ledger book. And it seems that Solana has about 1,000 validator nodes. But look, most of the transaction is TPS. By the way, Solana claims to have a 50,000 TPS. About 2/3 of this TPS has to be spent on the election. It means the actual TPS that can serve your interest is less than 15,000. And therefore, we say that Solana is not that decentralized neither, because we don't even know how many of these validator nodes are controlled by the Solana Foundation or what. And by the way, don't forget about this hardware requirement. It means you want to be a validator node on Solana, you have to pay a lot of money, approximately around $20,000 per month, to have these hardwares, and then you can run a node. And these are all entry bars to potential people who want to join the network to be a node or to be a miner or to be a user. So I want also to touch a bit on Ethereum, because I do think Vitalik is a great guy. Vitalik is great, not just because he made EVM, but also he sticks with the spirit of trying his best to do decentralization. What did he do is this. He is employing this, by the way, Vitalik and the Ethereum Foundation also cares about the hardware requirements and the level of decentralization, all factors, and so on. And what he shares with Kaspa's research team is that we all think we can't trust on the humankind nature, but we think promoting competition in game theory from economics is a better solution here. So what the Ethereum strategy is that they try to use Ethereum as the only layer 1, but to outsource computation and execution to layer 2s. And this seems to be a good solution, but I challenge it. I think it doesn't work. The reason is because that these L2s, their services are much centralized, and Ethereum cannot do anything with it. And I prepared quite a few different examples for this, right? Because comparing to the potential 51% attack you will see on Tron or Solana or Sui, because you only need like 50 or 20 people to do that, then on Ethereum, the problem is that they have no control over what the layer 2s are actually doing. These things can be rug, the issues can be outage. This happened with Arbitrum, and things can be higher rollback rates, which means that people are rolling back transactions for their own sake. And this is not always about justice. This is about fairness, right? Because if I got something stolen, people won't roll back the network for me. And this is about the MEVs, about arbitrage, about sandwich trades, about liquidation, and ultimately means reduced fees for layer ones. And here are the evidence, right? You see Arbitrum is on outage for about 24 hours, and that also happened to Solana before. And the ZK Sync, which is the one on top here, is also a famous Ethereum layer 2, had a lot of, I would say a lot of, almost all DeFi projects on ZK Sync rugged. Okay, the DeFi, the Xbank, the Carnegie Finance, everything rug pulls. And Ethereum cannot do anything about it. And this is the chart where you can see the transaction revert rate since February 2024. You can see the rollback rate significantly increases when Base and Arbitrum and Optimism, all those L2s are getting popular and making transactions there, because they will do rollbacks just because they serve their own interest. Okay? And again, it's just like the recent Bybit incident. If we got stolen for, let's say, $5,000, nobody will roll back the system for me. But if Bybit or these people or potentially the layer 2 operators or sequencers, if they want, they can roll back whenever they want to. And this is about the on-chain profit. It's about the centralized sequencer that is run by each of these L2s. And you can see on the bottom half here that people are saying Base have been collecting 110 million sequencing fees for the previous year, while only giving back $10 million to Ethereum. And the reduced fees for L1 means the consensus is undermined, and therefore the security is compromised. And you can see here, right, especially after March 2023, the on-chain fees are going high on L2s, and that is always happening. So now back to Kaspa. I want to use this as an example, right? How we deal with sequencer manipulation, how we deal with sequencing service that is manipulated by L2 or centralized operators. The answer we offer you is that we think competition solves this problem. We think that more blocks means that people have to bid for your transactions to be included in their blocks, and therefore that increases fairness for everyone. The design we have is that, for instance, if there is a, let's say, miner that wants to include a transaction in one of its blocks because they think ordering this block in a specific way can make them some money, let's say a sandwich trade for themselves, then to make sure they get this block included, this transaction including their block, they must kick back this money, at least part of it, to share the money with the users, right? Think about it. For Solana or any chain that you only have one block on the chain, and if this block wants to order the transactions in whatever ways he or she wants to, they can just do it without asking you, because now, in whatever ways, elected or staked, now they are the leader and they control this round of sequencing. However, with 10 blocks per second, it means a few things. It doesn't just mean that miners don't have the time to check on what's in this block, but also they have to make a quick decision to decide which transactions sent by wallets or users they want to include their block, and decide to give a cut of their profit to kick back to the users. That is to say, originally the money was exclusively held by miners or searchers or block sequencers. For instance, they can get $200 from this block, and now they at least want to share, let's say, 100 or 150 with you, and we see that is an extremely good thing for common users. How does this happen? As we said, the sequencers will compete for transactions, as you can see in this table. But also we say this is just one example. For instance, when coming to Oracle service or data service source, because if we are trying to run on some off-chain data on-chain, we need some Oracle service providers. It's actually the same logic, right? This is the same logic across the history of crypto and blockchain, that you want to have more decentralized network so people can compete for different things. And therefore, this only matters and only can happen on Kaspa because now you have more blocks. The comparative with Ethereum and other chains is like this. They want competition to happen on some other levels. They say, let the competition happen on L2s. Or they may say, let the competition happen among exchanges or different kinds of DeFi products. And we claim, on behalf of Kaspa, is that this competition can simply happen on layer 1 among the blocks. You don't have to outsource it and to believe that L2s or other centralized sequencers will do you any good and run that competition in a fair sense. So this is very simple story I present to you here, is that 1 BPS in a second unit means that you only have one bidder, and there's no competition, and that is a malicious, centralized, monopolized status of market. When you have 10 BPS, you have 10 bidders, so you have some competitions. Theoretically speaking, there will still be potential colluding malicious nodes, but to be fair, that in a second time unit, this is unlikely to happen, but that is theoretical. And Kaspa team is also pushing for future updates to make 100 BPS alive, which means there will be 100 bidders, and that is near fair competition for the market. And therefore, by then, the nodes must share the income with users. Whatever this income is sourced from, right? It's sequencing fee, it's Oracle service fee, whatever it is, it has to share with the one who sends the transactions. And this is what we think that empowers the users of Kaspa, and that's the spirit of the blockchains. Now, the next question is, how much money we are talking about? How much money that we claim and we allege those layer 2s and centralized sequence have taken away unfairly from us? And this is just, again, one use case of centralized sequencer taking from MEV incidents. The Ethereum cumulative MEV boost rewards is 1.4 billion US dollars. And this is not counting in what is collected by L2s, right? Because if you look at the news, Base Chain just offered less than 10% of their sequencing fee back to Ethereum. So I would argue that maybe L2s collected 10 times more than this. There are 32 more layer 2s like this on Ethereum. I know not everyone is as big as Base, but there are 33 more Ethereum L2s, all right? And there are 37 more L1s, at least, based on what I can observe on the market. It means at least about 1,000 times of this money that should have been going back to decentralized sequencers, or at least a part of them should be kicked back to users who send the transactions, who allow the sequencers to exploit them by reordering their transactions. And that is why people should care, and that is why this allows people to generate more income with more blocks. So to summarize, what do more blocks bring, and why I say more is just better? Because more blocks means you have fair competition. And what does competition do? Because competition allows us to make some money. And I almost forgot about this question, all right? Because I will say if Justin from Tron is here, he won't like this idea of Kaspa, because he's one of the 27 supernodes for sure. But the question presented to almost all of us here is that, do you think you are the one of the 27 on Tron, or you are the one of the 105 on Sui, or one of the 1,000 on Solana, or one of the 860,000 potential block diggers or miners on Kaspa? I think that answer is quite obvious, right? Because when we firstly have Bitcoin and Ethereum, we were thinking of empowering people and giving people more equality and giving people fair chance of trades, and to have them entitled to the right of owning their own network and assets. The question and the problem we spot today with Kaspa is that this is not happening with other L1s. All right? So therefore, if you believe that you are not going to be one of the supernodes, then Kaspa is a network that you should pay attention to. This slide and this presentation is not just about, oh, come on, everyone, just come and buy some Kaspa. But this is really about re-examining you on why you stick to the crypto and decentralized values, and is there actual a network that can help you do this to protect you and your assets and your freedom. So yeah, this is like the summary slides of this presentation. That I think more blocks means more transactions, which means more blocks also means instant confirmations. We have a lot of users and active wallet addresses. I think some of these are mentioned in our other presentation, a startup pitch by Kaspa's team, a protocol built on Kaspa, that the highest daily volume of transactions we proceeded before is 16 million transactions per day. And that's outnumbers any other chain with no errors and with no interruption of the network. We have about 260,000 active wallet addresses, and I'm not exaggerating. And they are very active, and we have a lot of merchants that already accepted Kaspa as payment because they believe that Kaspa is some assets that can be protected and by decentralization. In my presentation, I also talked to you why more blocks just means more decentralized and more competition. This also means more income for users. Even if you're just someone who holds Kaspa and sends transactions on the Kaspa network, as I just explained to you, that the sequencer now needs to share the revenue with you, and therefore you will get more money from there. You will at least receive a better slippage rate when you trade on DEXs and Kaspa and so on. And in the future, that we are still working on things like 100 BPS. I think that will be remarkable, even as a recognition from the industry. It means that this is literally the most secure and most decentralized work, and almost everyone, even if you have a, let's say, the smallest miner, you can get a block reward, and you will be incentivized to join this kind of network. So with all that said, that we hope people here can rethink why decentralization matters, and to just go home and check if other chains are delivering their promises of decentralizing themselves, and then come back to decide if they should be the next one to join Kaspa. Thank you very much.